Well, relief could be on the way for Aussie homeowners after the Reserve Bank indicated it's open to delivering an interest rate cut next month. The sentiment was revealed in the minutes from the April meeting, with board members saying May would be an opportune time to revisit their monetary policy. It comes as ANZ joins its fellow big banks in slashing its term deposit interest rates. For more, we're joined by founder of Fortlake Asset Management, Dr. Christian Bayliss. Good morning to you. Tell us why they're considering this now. What's tipped them over the edge?
Well, number one, I guess domestically speaking, they've got all of their updated forecasts by the time they actually go to the meeting. That's going to be a huge thing. They're going to have 3 months of CPI data, so the full bandwidth there to make sure that they can assess what's going on with the inflation side of things. And then I think also what's happening is we're trying to sift through all of the tariff-related chaos and understand what that actually means for inflation and therefore global growth and therefore how Australia is actually affected by it. And I think they'll probably come to some type of interim conclusion on what that means for the Australian people. And it probably means that it tips them over for a cut, I would say. It's a finely balanced one, but I think there's probably a slightly better than 50% chance that they cut.
Because only a month ago, before tariff situation, everyone was, well, a lot of economists were sitting there saying this will be months and months and months and months till we see a cut, weren't they?
Yeah, that's right. And I think, look, the tug of war that's ultimately going on with all the tariff chaos is, on the one hand, you've got the tariffs in the back and forward. And I guess what that means is, do we go back to the COVID type era where tariffs induce these supply chain issues and everyone just down tools and says, what do we do? And then all of a sudden you've got all of this demand and there's no one at the ports, there's no one doing the trading anymore because everyone is just stricken by the chaos. So that could cause inflation. But then on the other hand, the chaos is actually leading to everyone just doing nothing and sitting on their hands, and that hits global growth, that hits basically revenues, and that means economies can go into recession. So you've got this toing and froing going on between those two dimensions, and ultimately the RBA has to make a decision on which one's going to be the stronger, have the stronger pulse on inflation. So that's the challenge that they've got.
So 60-40, you reckon, for a cut?
About that,
We'll put you down for 60-40.
Okay. I'll take that.
Thank you, Christian. Here's Shervo.